Hey, so in today's video, I'm going to cover several points of topic when it comes to a buyer buying a home in North Carolina, especially in our area. I get this call quite often from clients that, want to either purchase a home for themselves or, maybe have a son or daughter that is of age now that wants to purchase a home and they haven't gone through the process in a long time. And of course, always start with the basics, which is, asking a little bit about the knowledge that that they have on the process. When was the last time they've maybe talked to a lender or taken out a mortgage? So, there is a philosophy behind doing all your homework up front, and that pertains to buyers. It also pertains to real estate professionals who are guiding that buyer in a successful way and getting them established into a home. There's some things that, each real estate professional should do. I can't speak for others, but I know how I handle my process, and this is kind of why I'm just covering some of this with you guys so that you can maybe share a little bit about this with whomever it is that you want to talk to about buying a home, or if you are helping someone to buy a home. I start with the basics, which is maybe talking about loan. Do they have a lender? Do they have a bank? Have they checked their credit score? When was the last time they filed an application for a loan? What kind of debt do they or the person that wants to buy a home have? Is it high interest credit card debt? Is it student loans? Because it really does matter. And I think all in all, getting a good idea of what your status is financially is going to be the starting point for anybody who is considering looking to buy a home, whether it's a second home or a first-time home. We also have a handful of lenders that specialize in first-time home buyers assistance for anyone who is looking to buy a home for the first time in North Carolina. Some lenders have, specific officers, loan officers that know this product backwards and forwards. They know the ins and the outs. There are some decent offerings from the state, federal government as well on down payment assistance, also interest rate buy down, and then in some circumstances there's a tax credit write-off, which helps reduce the mortgage payment. But I can certainly put you in touch with any lender that has these products available, and they can explain their product and how the process works and what the requirements are of that. So first place I would start with credit score is asking the person, have you checked your credit score lately? Do you even know if you have a credit score? And if you do, what does it look like? There's a free annual credit report that anybody can get, at least once a year from one of the three credit reporting agencies. You just have to go to free annual credit report, get your information put in, and you should be able to determine what your credit score looks like. And, there may be just discrepancies. That does happen from time to time, but it's a great place to start. Any lender can also help you with that by pulling your credit, or at least putting in all your information to determine what type of credit score you may have, if any. So, again, sitting down with a lender, checking your credit, determining what kind of debt you have, if any, and if you do have debt, what type of debt is it? Is it high interest credit card debt versus student loan debt, or is it all the above? So that's a great place to start. And then I also tell the prospective buyer or the person that's looking to help their family member a little bit about, determining where they want to be. Do they have a specific goal in mind as far as, their budget? Even not knowing what they may qualify for in a loan, you have to understand what your monthly budget is going to be. And that's ultimately how much you're going to pay for a mortgage every month, on top of insurance, groceries, utilities, child care, if any, school, etc. I mean, as everyone knows, it is expensive to live anymore, and you have a lot of incoming bills, and you have only so many dollars coming in to support that. So you have to determine, okay, what's your budget? And so I always recommend that if they have not really worked on a budget, that's another great topic to have a conversation with their lender or whoever they may choose to sit down and determine okay, this is my financial picture on paper. This is what I bring in. This is what I would like to hopefully qualify for in a house price range. And then the lender can help the buyer determine what the budget should look like, especially if they've got debt to pay down. And there may be some debt that needs to be paid off before some other debt to improve that credit score, or the buyer may be ready to go and have savings, no debt, and a reasonable income. That's obviously best case scenario, and it's a lot easier to manage. And then from there, it's, well, even if you make a good bit of money and you can afford a $600,000 house, you may only want to spend money on a $300,000 house because that's the budget you've got set for yourself. So if you're a financial steward and you have a reasonable budget set up for yourself, you'll know what that looks like. And if not, we can certainly help you and guide you in that direction to get you prepared to look at your budget and determine what your affordability is going to be. And then ultimately, setting a price range for the house is going to come down to what that budget looks like versus, what you can actually afford or what you're willing to spend every single month on a mortgage. And that's going to include your principal and interest plus taxes and insurance. And then, of course, you have to consider HOA fees, if any, and then utilities and all of that. So we're going to factor all that into what your budget should really look like and what your affordability factor is going to be, especially if you don't really know what that is right now. But that's really the best place to start. And I tell people, don't wait until you want to go buy a house. If you want to buy a house next week, you should have done all this homework months in advance. And I've got so many clients that I've worked with that really I'm still working with because they've still not yet bought a house, but we've been talking for 2 years, and they had an opportunity to sit down with the lender and go over everything I just discussed. And they put a financial plan together, and they've been paying down debt, saving money, and increasing their income with the opportunity to now set a goal for next year to buy a house. So, you can plan 6-12 months in advance and actually put yourself in a really good position to potentially buy, but you have to know what your plan is in order to get to that point. So please don't wait until the last minute. Call me and let me know if you want to set up a time to talk. I'd be happy to go over the ins and the outs of this process with you, put you in touch with the lender or even a handful of lenders that can give you some real advice and some options to work with you and get you the highest credit score and get you the lowest rate possible. So hope this tidbit helps. It's very confusing sometimes, so it does require a little bit of thought, but that's part of the process, and I'm willing to help you any way I can. Hope this video helped you. If you like, please subscribe, share this video. But I'd also love to talk with you personally. So if you want, pick up the phone, call me, text me, however you're comfortable communicating. I look forward to talking to you soon. And again, Scott Shapiro, RE/MAX. Have a great day.